Thank you. I appreciate that. And I appreciate the opportunity to be here with everybody today. We are going to go through, I'm going to put up some slides and that kind of thing. We'll talk through the subject matter. Just so you know a little bit about my background, I do have a forensic accounting firm. My firm is primarily focused in three principal areas. One is internal investigations, fraud investigation type of cases, and we'll talk a little more about that today. Another is that and this really takes up the lion's share of my time, any kind of an issue that requires a forensic accountant for litigation, I tend to be involved. So I do damages calculations and uh, provide opinions on accounting issues and things of that nature. And so at this point, I just finished another trial a couple weeks ago, and that was my 70th time testifying under oath, which makes me feel even older than what Mark just said about when we first met. So that's the second area. And the third area is I actually do some work for an insurance carrier um, where they get business interruption claims primarily, sometimes employee theft, but mostly business interruption claims when fire or hurricane or something shuts down a business for some period of time, and they can make a claim for lost income, and I take a look at their financial statements and things on behalf of insurance companies. So those are three primary areas. I've also done some work in receiverships where I was actually a deputy receiver a couple times and had the opportunity to run some small businesses for short periods of time while we figured out what was going to happen to them. Those always produce some interesting stories. I always love telling people about how in a divorce case, this couple owned a 50-50. They owned a smoke shop in Mesa. If you know what a smoke shop is, basically it's water pipes and tobacco and vape type stuff. I knew nothing about this industry going in, but boy, did I learn a lot. We thought we were going to be in there for 3 or 4 months, and I ended up running that thing for almost 18 months. And our Black Friday was not the day after Thanksgiving, it was April 20th. So if you know the importance of the date 420, and it's kind of the hotheads holiday, it was a big deal. So that was a fun experience and really interesting stuff. So what my background, I did an undergraduate degree in accounting at Arizona State University, did a master's of accountancy at Brigham Young University up in Utah. I'm a certified public accountant. I'm also certified in financial forensics by the AICPA, certified fraud examiner and a certified internal controls auditor. Spent my first 5 years in public accounting at Deloitte. Decided after I watched Anderson collapse and the onset, the coming of Sarbanes-Oxley and so on and so forth, that was not going to be my world anymore. And I actually spent 3 years in academia. And then since 2005, I've been in forensics. So it's about 27. It's actually, yeah, this week 27 years ago I started at Deloitte. So I'm feeling the age at this point. But I'm excited to be here with you. I like sharing this information. Momentarily here, I'm going to put up. I'm going to share a screen with you, so you don't have to stare at my face anymore. Um, just one thing, I will apologize ahead of time. I have a rescued racing greyhound who I adopted a couple of years ago, and she has decided to make her place on the floor of my office right now. And this is about the time of day that she tries to manipulate me into giving her dinner and treats about an hour earlier than she usually gets them. So if you hear her whining in the background, I'll try and let her out. And the last thing is, as far as taking questions, if you could just put them into the chat box, I'll either take them on the fly as we're in the material, or I'll try and catch them up at the end. That way, if I'm coming up a material that's going to answer your question, I'll try and link it as we go. And then we're not trying to talk over each other and that kind of thing. With the Zoom stuff, it's a little bit more difficult to take questions verbally. So if you wouldn't mind making use of that function in order to throw some questions out there, I would appreciate it. So the first thing I'm going to do is I'm going to switch over and share my screen here. And you all should now be seeing uh, my slides. So what we're going to be talking about is I'm giving you an update on kind of the latest information on occupational fraud. And when we talk about occupational fraud, what we mean is specifically where employees are using their positions to get things that they shouldn't. Yeah, there's a little more technical definition we'll get to here in the slides, but that's kind of the gist of it. This is mostly employee theft, corruption, financial statement fraud, that kind of stuff. Issues of cyber fraud and phishing schemes and executive impersonation schemes and so on and so forth are definitely hot topics. They continue to rise and continue to be important. That's not our primary topic today. We're going to be looking more at people who are already insiders and the things that they are doing to defraud their employers. So, uh, just in talking about kind of the source material here, so you're aware of it. The statistics are based on information assembled by the Association of Certified Fraud Examiners. About every 2 years, they send out a survey to their members and ask them to talk about the frauds that have occurred in the previous 2 years. And they take that data and they put it into this report. They call it the report to the nations. You can download it from the ACFE website. Just another note on, because it is survey evidence, or survey, survey results. Don't look at these statistics as being absolute. There's always going to be a little bit of selection and bias in them and that kind of thing, but it does give you some decent idea of what is going on out there. And what's interesting too is that over the years, a lot of these statistics have remained relatively steady, despite the fact that every 2 years it's a completely different group of cases that are being included in the survey. So keep that in mind as we go through some of this stuff. All right, so I am regarding the report to the nations. We're going to start here. Some statistics that kind of to grab your attention. Uh, First things first, the median. You guys are finance people, so you can tell the difference between a median and a mean. We're going to start with the median here, the middle occupational fraud loss or employee theft. During this time period worldwide, because again, the CFEs are members of the ACFE are all over the world, it's about $145,000. Um, the mean, well, I'm sorry, let's just talk about the US. Can I give you some kind of comparison? US about $120,000. The mean worldwide is 1,662,000. So what does that tell you about the shape of the data? It tells you that there are some very, very large frauds, occupational frauds that are out there that are pulling that mean up. It's just there are not a lot of them. But when they hit very, very hard. Uh, Next thing, 22% of the cases, of all of these cases, included a loss of at least $1 million. So when you see a median of 145, you might think, well, the organization I'm in of 20,000 employees or some such thing, no one wants to lose 145,000, but that's not a huge deal. Bear in mind that 22% of these cases actually have at least $1 million that walks out the door. Okay, next item. The estimated loss here amongst companies by the certified fraud examiners who responded here is that about 5% of revenue actually disappears to fraud every year. Now, notice it says revenue, not income. This is before expenses. So 5% of gross revenue is disappearing. So this is a significant problem. I think we all hear stories that make headlines and things, but these things are happening all the time. All kinds of companies, your clients, they have an employee that has been nice and loyal for many years, and all of a sudden something comes out, and you find out that they've been stealing for 10 of those years. This stuff is occurring. Every day we get new headlines, and we get new investigations we have to take a look at. So just bear that in mind as we go through some of this information, that this is how big this problem really is. Bear in mind too, a lot of this stuff never makes the headlines because the companies don't want it out there. A lot of companies like to sweep this under the rug. They don't want the embarrassment. They don't want the headlines. They just want to get this gone, one way or another. And I can get up on my soapbox about that issue as we go through this. The median length of time that a fraud went undetected was about a year. So you went into work every day, work side by side with these folks, and it turns out that for last year they've been stealing while you were working with them. Um, Next item here, if it's 6 months or less, the fraud median is about $30,000. So the faster you can find these things, the smaller they are. Now, I realize that's pretty it's Captain Obvious a little bit here, but this cannot be overstated. That the faster your controls can actually detect these things earlier in their life, you're going to save a multiple of your losses. So, by way of example, if it's been going on for 25 to 36 months, the median balloons to about $250,000. If this thing has been going on for more than 60 months, the median is $875,000. So you can see how important it is to try and catch these things early. We all recognize internal controls are never going to be perfect, that they are sometimes going to be uh, they're going to be difficult to deal with. You don't want to do them, that kind of thing. But strengthening controls, keeping an eye on those controls, making sure those controls are being followed is one of your best ways to make sure these things are found early. Okay, next issue here. If we can go ahead and get mine to work. There we go. 50% of the frauds had no subsequent recovery of stolen assets. So, I'm a CPA, so I'm qualified to quantify, turn that phrase into a number for you. When it says no subsequent recovery, we mean $0. It I know this comes as a shock to most people, but when it comes to fraud, most of the time people are not stealing to put it in a savings account. They're usually stealing because they're supporting a habit, or to use that money to support a lifestyle, or in some cases to pay for something they consider to be a worthy cause, like medical bills for a child or for a parent or things like that. They don't just sock it away, unfortunately, so it's very difficult to get anything back. All right. Median loss for perpetrators who have been with the company for a year or less is about $50,000 versus people who have been there a while is $250,000. Now, some part of that is the fact that they have more time to do the fraud. But really, the most impactful part here is they know all of the ins and outs of the company. They know uh, where where things are weak. they know the systems well enough that they know how to get past controls. And so the big frauds are with the people who have been there a long time. It's not the new guy who you don't really trust yet or haven't known for a while. It's that person who you've worked with for a very long time, who is really perpetrating these larger frauds. Small businesses, and by that, that's defined as fewer than 100 employees, which if you're someone like Mark or James who works with B2B, you probably have a number of clients who have, whose businesses have less than 100 employees. They actually suffered the second largest median loss of 141,000. And this is actually kind of a switch, which is interesting. And I have a theory about why this is the case. But they used to be the largest median. They're now the second largest median, and also in a change previous, they had the lowest percentage of frauds in the survey. Anyone want to take a guess about why that might be? Probably changes related to COVID, because now all these larger companies have employees who are working from remote locations, and their internal controls have not adapted quickly enough. And people are out there and exploiting those control weaknesses that didn't used to exist, versus smaller businesses where there's not so much remote work going on, and the controls, not a huge change in controls either. So I think that's part of why we saw this shift away from the small businesses getting hit the hardest, and they're still getting hit very, very hard. If they're having a median loss of $141,000 and they have less than 100 employees, that hurts. That hurts. So something to kind of keep in mind there, if you are working with either larger or smaller, there is this shift that's been going on in the statistics. Quick question that was put through the chat here just now. Is there much recidivism with financial fraud? Yes. Yeah, in fact, what the data shows is that the rate of recidivism, I believe, is upwards of 80%. And I say that because what generally happens is that the first time they're caught at an employer, the employer does not either prosecute them or make it public information. They just fire them, and then this person goes off to another place, and in a short period of time, they start exploiting the same kind of weaknesses. And it's not until they're finally caught and turned in that you find out that they've been doing this, that they are repeat offenders. We're going to get into some of the statistics here on these people as far as what the person looks like, in terms of their background and that kind of thing. But what we're going to see is that the overwhelming majority of them don't have a previous criminal record, even though it's pretty likely that this is not their first time stealing. I'll come back to an example of that in from my own experience here shortly. So our definition that I alluded to earlier, what is occupational fraud? It's using your occupation for personal enrichment through the deliberate misuse or misapplication of the employee and organization's resources or assets. So this is outside your payroll that you've earned, finding other ways to use the company's assets and its resources for your own benefit in ways that you weren't allowed to do. All right. So, three general categories that we usually talk about with occupational fraud. First is asset misappropriation, which is a fancy way of saying stealing stuff. 89% of the cases in this round of survey included some type of asset misappropriation, and the median asset misappropriation was about 120,000. By the way, as we go through these percentages they're going to exceed 100% in total, because some frauds have multiple fraud types associated with them. Next one is corruption. That's basically getting privileges and stuff that you shouldn't just because of the position that you're in. 48% of all the cases, that's a pretty significant increase from prior years, and the $200,000 median on those. And then the last one here is financial statement fraud, which basically is going on to into the accounting records and making crap up, and put it into the system to alter the financial statements. It's only 5% of the cases, but the median is actually $766,000. When people decide to make journal entries, it's go big or go home, apparently, when it comes to financial statement frauds. I do various presentations to students, especially with my academic background. I have some friends who finished their PhDs when I chose not to, and they have me come to some of their classes. When I point out with financial statement fraud is that the purpose of a financial statement is to measure reality. There are, of course, some estimates and things in there, but when you are altering those entries to create an alternate reality, that's when you cross that line. You cross that line into financial statement fraud when you are trying to tell a story that isn't real, and trying to get some kind of benefit out of that. Okay, so let's talk a little more detail here. When we talk about frauds, as far as our examples here, as far as asset misappropriation only, that's 51% of the cases. So just a bit more than half of the time, the fraud that you'll discover will only just be an asset misappropriation. Stealing cash, stealing checks, stealing inventory, things of that nature. All right. 35% of our cases are asset misappropriation and corruption. Interestingly enough, when someone is taking bribes from an outsider, they also like to steal from their employer, at least 35% of the time. It's an interesting little hand-in-hand thing there. Corruption only is about 10%. Corruption, asset misappropriation, and financial statement fraud, you're going for all three. Yeah, that's only 2% of the time. Asset misappropriation and financial statement fraud is about 1%. Financial statement fraud by itself is only 1%, and then less than 1% of the time is when you have corruption and financial statement fraud. So, you can see the ones that tend to go hand in hand, and you can see how much the rate of incident actually drops off. Unfortunately, even though the rate of incident drops off, the size of the fraud goes up. I think partially is because the controls necessary that you need to override to do financial statement fraud, for example, tend to be a little more. The only people who can really do it are executives, and when they do it, they do it for big dollar reasons. Okay, so let's talk about some schemes and how they get found. Obviously, there are schemes. There's all kinds of schemes that are affecting businesses. They're coming from all directions. When we talk about internal, we usually mean occupational fraud, which is the stuff that we're mostly talking about today. External would include something like vendor fraud, but they can also be colluding with an insider in order to achieve their goals. So, for example, the vendor comes to someone who they know is responsible for approving payments, to them. You might say, "Hey, let me over invoice for this, and I'll split it with you on the outside." That's not an uncommon scheme when it comes to a vendor fraud. Financial statement, of course, is a type of internal fraud, but it's usually associated with employees who are in management. It can also involve a business partner in a joint venture, for example. Anything where there's a reason to alter financial statements, whether it's to um, fool the stock market or fool lenders, any kind of creditor or owners, shareholders. That's generally where we see these things. Now, sometimes there might be a compliance element where a company has to provide financial statements, and in the course of that, they are altering their financial statements to beat certain ratios, or to not disclose certain types of prohibited transactions that, because of licensure issues, they should not be involved in, those types of things. Then, of course, we have our online stuff where we have companies' websites that are being spoofed. where we have identity theft, hacker blackmail, executive impersonation. These ones, by the way, are getting really scary when it comes to AI. More and more, we've always kind of said with the executive impersonation, if you get an email from, it claims to be from the CFO saying, "Hey, you need to wire this money out to this place, it's like on a weekend or a holiday, we've got a big deal going on." We always tell people, "Hey, pick up the phone." Uh, but AI now is impersonating people's voices. It's impersonating people in video. So the controls that you have to put around these types of transactions are going to have to really increase in sophistication because the fraudsters are always a step or more ahead of us in terms of the ways that they're pulling those off. Okay, common schemes. We're going to start with non-cash schemes. This is primarily your inventory. If you have any kind of inventory that is valuable, that is easily moved, and that is easily concealed, you are especially vulnerable. When we see these, we're seeing these about 22% of the time, and median on the inventory thefts is about $66,000. I am involved from time to time with my insurance carrier client taking a look at some inventory thefts. A couple of them actually going right now with a company that owns multiple car dealerships, and they've discovered that their controls over parts inventory were not particularly robust and strong, and they, especially around COVID, they didn't actually have an outside count service come in for about a year. And when post-COVID, when one came in and started doing some looking around, it generated a claim well in excess of $100,000. Anytime you have stuff that is desirable like that, sitting in a warehouse, sitting in a manufacturing facility, those controls around those physical items need to be strong. They need to be monitored. That's another issue. You might have a control, but if it's not being monitored, then people figure that out, and it will disappear. It will absolutely disappear. So, something to keep in mind. Billing schemes, again, this is another 22% of the time we see these, about $100,000 median. This is going to be stuff like overbilling for goods. This is the kind of the collusion that with an outsider type of an idea that I mentioned earlier with vendors. Creation outside just creating a dummy company and getting it into submitted into the AP system. Look, some fraudsters will go so far as to actually go to the Secretary of State website or a corporation commission, depending on what state you're in, create an LLC, give it a name that is really, really close to a vendor that is commonly paid by the company. Use it. Maybe you have a lot of contracts with ABC Inc., but ABC LLC is available, and so they go create ABC LLC, and they create invoices that look just like ABC Inc., but have a different payment address on them. And they put these things through. They'll even get an EIN to try and make this thing look as legitimate as possible. And it turns out that the address is at a UPS store or mailboxes, etc. And those checks end up getting sent there. And your employee who's submitting these fake invoices just stops by on the way home from work, and they'll go open a bank account in the name of this company that they've created, and they'll cancel them. And so you got to keep a really good close eye on the controls over vendor creation. A lot of times people are really concerned about invoice approvals. But, if you're in an industry that has a lot of construction, for example, or gets a lot of invoices from a vendor in short periods of time, it's easy to sneak one of these in there, and it'll look like it's something that should be approved in the same process. But really, the control that would have stopped this is in the vendor creation side and making sure and verifying the legitimacy of who that vendor is before they're entered into the system. Also making personal purchases through the business. One of our participants here today mentioned P cards. purchase cards. They are a two-edged sword. They can be very, very useful in fraud prevention, but if they are not well maintained and monitored, they can be a nightmare. Um, uh, it can turn into all kinds of issues in the field. I had a case, it was actually one case where I ended up testifying for the state in a criminal matter. It was a controller of a company that was actually this is all public information, by the way. I'm not sharing anything that I shouldn't, but um, they were a contractor who actually specialized in the Phoenix area in remodeling pools. So not the original put in of a pool, but remodeling. And if you've flown in and out of Phoenix, you're not from here, you know that about every other house, the backyard has a pool. And there are some people who have more dollars than sense, and they think that they want to, their pool isn't fancy enough, and they'll drop six figures on a pool remodel so they can have a volcano that goes off, behind their pool or whatever for parties. And this controller figured out that one of the things that wasn't being very well monitored, well, as it turns out, he was the only one who was monitoring were the company credit cards, and so he remodeled his own home with it. Things like that, and made it look like these were purchases for legitimate contracts, and they weren't. So um, again, they're good tools. They can be very useful in fraud prevention and detection, but they can also be exploited. You have to have good controls around them. Expense reimbursement schemes. This kind of follows on into a similar type of thing using company credit cards, double counting expenses, unapproved expenses, unapproved upgrades, false expenses. Listen, right now, if you want just for fun, go Google fake receipts, and there's no end to the number of websites out there that will allow you to create a receipt that appears to be from a legitimate company. You want a receipt from Best Buy? You can go create it in moments, and you can download it, print it off, add it to your expense report, and it'll look totally legitimate. It's extremely easy to do, very hard to detect, and this is a very lucrative area for people who, especially people sales folks who travel a lot, um, and who are submitting large expense reports. Easy to slip a few in there that are not okay. Um, More than once, we have seen situations, for example, where let's say they're traveling to a client site or to a conference or something along those lines. They have to get a hotel. The company only allows certain amounts for hotels and maybe approved vendors. So let's say that they get a reservation through the company. Let's say that the company has its own travel group internally at the Hampton Inn or something like that. It's approved. Then they go and they actually call Hampton Inn themselves and cancel that reservation, get themselves a reservation at a much nicer hotel, go and live it up during their travel, and then they go get a fake receipt for the approved hotel, but for this new amount, and then they got themselves a free upgrade. And if people aren't paying attention on whether or not the amount matches what the reservation was going to be, those things will slide through because again, you've got documentation that appears to be legitimate. Um, so those types of things are happening. The internet has made these things explode because it's so easy to create documentation that appears to be legitimate. And then we have check and payment tampering. We do a lot of payments electronically these days, but there's still plenty of checks that actually get written and put in the mail. And sometimes these checks, the payees are being changed, signatures are not, and authorizations are being changed, the amounts are being altered. I had a situation with a case that was a large farm cooperative, and they would, rotate who was president amongst the cooperative, periodically. And the president, well, the president would go to their CPA's office because they had the same outside CPA for decades, and he would have there to sign a whole, pages worth of checks, of manual checks that need to be signed by the president. That was their internal control. And in the box where it says the dollar amount, it would have an amount made out, and the payees would all match the invoices and so on and so forth. And included in those were his monthly fees. And in those monthly, the monthly fee would appear to be the monthly fee they've always paid him. And but the line that has like the where it's written out in English to match the numerical amount would be blank. And the reason why is he would put them into a machine that would stamp it in. But for some reason, he gave them the excuse that he would stamp them after they were signed because it was easier to sign entire pages as you go instead of individual checks. And the presidents of this cooperative fought that. Well, what he would do on the one that was made to him is he'd add a zero to the numbers, and then when he would do the print, the stamp, he would make sure it matched the new number after it had been signed. And in that way, he ended up stealing several $100,000 of the cooperative's money. It got found out. I did put together an investigation, and then me and the company's attorney drove out and sat down with the CPA and explained what we believed was going on. And he kind of sat there silently and tried hem and hawed. And I pulled out of my pack a report that I put together. It was about, so a couple inches thick, and set it on his desk and said, "Why don't you go ahead and take a look at that and let us know what you think?" And about a week later, he called up his client and said, "Look, client's attorney and said we need to figure out how to settle this." And so they ended up with getting ownership of the office building that he owned and a lien on his home. So, these types of things that go on, check altering still happens. We have to keep an eye on our check stock. We got to keep it locked away. We've got to have good physical controls as well as access controls in our systems. All right. Cash larceny, just taking cash. This is, like usually it's diverting the cash before it ends up in the system. Um, there's a variety of means that this happens. Tends to be a little easier in smaller businesses because we don't have good controls. We don't do a great job of running Z tapes at the end of the day on our registers, things like that. I will just tell you that if I ever decide that I want to switch to the other side on the fraud thing, then I'm just going to get myself a job as an office manager for a doctor's office, because this happens all the time. The doctors, look, they went to med school. They did not. They were smart. They didn't want to become accountants, and so they leave it in someone's hands, and they trust that person. They don't supervise them, and this stuff happens way too often. And with cash larceny, any kind of payment that is made for a co-payment or anything along those lines, these will get diverted sometimes, and it's really difficult to find them once cash is gone. It's really difficult to figure out where it goes. I've had a couple of cases where office managers at medical professionals' offices found ways to divert cash. Um, and one example, lady was put in charge of basically everything financial related to this medical office. She had no background in accounting, finance, or anything. Just came in and was originally hired to stock office supplies, things like that. She ended up getting more and more responsibility with less and less supervision, and they had really no controls over cash. When there were co-pays that were paid in cash, they had a rudimentary cash log system. Wasn't super accurate, but it was at least something. We were able to put in front of the jury, hey, look, when there's gaps, days that go by where there's no cash being recorded on this log, her personal bank account has round dollar amount cash deposits going on. It wasn't a smoking gun, but it was a very interesting um, pattern that we put there in front of the jury. Um, Actually had a situation with um, a plastic surgeon who gave the keys to the kingdom to his office manager, and the office manager uh, and the receptionist were colluding on ways to steal, and the receptionist was actually telling people who should when it would say who should I make the check out to. Her story that she would give them was, well, people sometimes do it to the doctor, and they sometimes do it to the name of the business, and it ends up all these being really confusing at the bank. But if you just make the check out to me, everybody knows me at the bank, and I just get it deposited. And believe it or not, patients believed her. They actually wrote her checks, which is just absolutely mind-boggling to me. But it worked. So something to keep in mind. Payroll fraud, ghost employees, you got to have good controls over your payroll system so you can't create employees that don't exist. Unauthorized wage increases. My gal at the doctor's office who was, stealing the co-pays, she was also giving herself raises. She doubled her salary in about a 2-year time period, and no one knew it. She was giving herself also some extra paychecks. And so there were actually times where she was the highest paid employee in the entire business, being paid more than the doctors. And she was just running the back office. So got to keep a close eye on those bank statements, got to keep a close eye on your payroll controls. Just simple tests in payroll to make sure there's no shared social security numbers, things like that are super easy to put in and can really pay off big dividends in finding things. Previously we talked about the some of the billing schemes, vendor schemes, things of that nature. Um, have to do just take a download of your vendor database and your download of your payroll database and see if any of the names or addresses match. Because you may end up with a fake vendor or someone who has an employee has put their name in as a vendor and is picking up extra payments that way. Our corruption schemes show up about 35% of the time. These are our kickbacks and bribes. I had a case where a gentleman who was in charge of procurement of trucking services for a very large family-owned consumer products manufacturer went to some of his favorite vendors and said, "Hey, you're gonna take me on vacations. You're gonna buy me things if you want to keep the contract with this company." And they paid. They paid. These CEOs, most of them paid. And in the case I was involved in was actually a defense case. They paid a lot of money to this guy, and the company turned around and sued the trucking company. Now, there was no direct theft because there was no overbilling or anything like that, or no, um, you know, using this guy to steal. But what they were alleging in their civil case was that they upped their rates beyond what it should have been in order to make up for these kickbacks and bribes. Um, my one piece of advice to you is if you are ever find yourself on in the wrong end of one of these cases, is please tell your attorney everything because this case got to trial and our client's administrative assistant got up there and told some things about some of the services that were being purchased for our recipient of bribe in the form of some very illegal activities with um, some of his favorite companion forms of companionship that the attorneys did not know, and this was in a small town jury, and that was the end of the case on day one. So it went very very bad for him, and the feds were keeping a close eye on this because it involved interstate trucking. So it was a pretty bad day. Um, Concealment efforts are one of the things that we use in our investigations to try to show intent Um, here's a note for you to take away from today is that fraud and stupid look a lot alike. And people's mistakes and fraud can look the same. And so we focus on evidence of concealment when we are trying to prove fraud because we have to prove intent. Concealment efforts can come in a lot of different formats. The most common one is you are creating fraudulent physical documents. So, like my fake receipts example, or it's taking a document and altering it, like checks. Um, electronic versions of those same documents. Those are our more common ones. I like to actually look for one that's a little less common. It's about midway down on this list, and that is any kind of alterations to the accounting systems. Look, like it or not, most small businesses are using QuickBooks. QuickBooks does not have good controls. Super easy to go in there, make adjustments, so on and so forth. 9 times out of 10, the people who are making those adjustments have no idea that there's an audit trail in there. And I have uncovered several frauds just going into the audit trail and showing that transactions that were originally recorded correctly have now been changed to a different payee or to a different expense category or something along those lines. So the audit trail is your friend. If you're an outside CFO and you're checking on a controller's work or something along those lines, check the audit trail. Ask questions. Why is this payee being changed? Why, if it's a, you can also see by user who was making those changes, so you can really help pin it down that way. Vulnerabilities, red flags, greatest fraud frequency. The person who is doing this, they're usually in the age 36 to 40 bracket. They've been employed by the company 1 to 5 years. They are at manager level, usually a male. Sorry, guys. They usually have a university degree. They work in an operations area. By the way, accounting is second at about 12% of the time. No prior criminal background. Remember, I said 88%, 87% of the time. My office manager lady who was stealing cash and then also was giving herself payroll stuff. She was also stealing using credit cards, debit cards, and she started stealing within about a week of starting there. So the likelihood that this was her first rodeo is really, really low. The good news is that we put her in jail. So that was a good thing. Median is about 100 to $200,000 with this particular person. Largest fraud. These folks are over 60. For the most part, they've been employed there more than 10 years. They're executives. They got post grad degrees. Again, males. No prior criminal background. And the median is 250 to 675 because these are your folks who are doing your financial statement frauds, and they're the ones who can override controls far more often. By the way, on the gender issue worldwide, it's about 74% male, 25% female. You know, it doesn't add up to 100. Let's not get into gender identity politics. In the U.S., by the way, because we are making progress towards equality. It's about 62% male, 38% female. Way to go, ladies. Good job. Um, Median loss about 158,000 for males and about $100,000 females. You're closing the gap, ladies, there as well. I'll give you a pat on the back. Um, Collusion. 46% of our cases are just one perpetrator. Two perpetrators is 18%. You can see how much the loss goes up though. And if you get three, it's about 36% of these cases, and our median loss jumps to $329,000. I haven't done the academic research on this. I've done actually some poking around to see how this goes, but my sense is that there is an inflection point where the number of parties who are colluding actually increases the likelihood of it being detected because you add one more person who just can't keep their mouth shut at a bar one night, and this thing all comes crashing down. So somewhere in there's a magic number, but I don't think researchers have found it yet. Top 5 behavioral red flags: living beyond their means, 39% of the time. If your janitor shows up with a brand new Ferrari, it's time to ask some questions. because they probably are not making enough money to afford a $300,000 car. Let me just give you a quick case example of this. If any of you have watched the documentary um, called All the Queen's Horses, it's about the comptroller of the city of Dixon, Illinois. Okay, very small town. She had been the comptroller for like 20 years, something like that. She made, I think, something like $75,000 a year in that job. But she was also a very famous and very accomplished breeder of quarter horses. And she had won numerous awards for this. And she had a very large facility that she owned and lived on out just at the edge of town that boarded many of these horses. And she had herself $1 million RV. And no one seemed to ask the question about how she had all this stuff and why it is, if she was so successful with her quarter horses, that she still had this $75,000 a year job. Well, it turned out because the city was actually funding that other business of hers. She had stolen $53 million during her time there. She had stolen roughly half the budget on average. Um, Neighboring towns had actually reached out to the mayor and said, "Hey, we're similar size city and similar, tax revenue and that kind of thing, but you guys are constantly in a budget fix," and the mayor didn't listen to them. It all came crashing down, not because she was aware, because of vacations or anything like that. She was always gone at shows, but it just so happened that she was away at one show, and one of her employees came into her office looking for some information to answer a question. Happened to see a bank statement for an account she didn't recognize, and started asking questions about it, and the whole thing blew up. She ended up being put in jail for a very long time. Her sentence got shortened during COVID because of her age. She is, I believe, now out, even though she shouldn't be. Personal financial difficulty shows up as a red flag. Unusually close with a vendor. Um, Sometimes there's just no behavioral red flags at all. I think most of those people are actually sociopaths because they just don't give, they don't want to tell, you know. These sometimes it's somebody who has control issues or unwilling to share their duties, and then so no one can look at what they do. All right, I know we're up against it on time. I'm going to give you the control weaknesses. 32% of the time, there was no control that would have actually found the fraud. 19% of the time, they're overriding those controls. 18% is because management's not doing their job and actually reviewing the work. By the way, these slides will be available to you through Fang. You can get them, so you can see some of these stats yourself. Poor tone at the top, lack of competent oversight. These are all very common. Discovery. Number one way that these are found is that you get tipped off. Another employee tells you. You need to give them a way to do that. Internal audit finds it 14% of the time. Look at the difference between number one and number two, though. 43% versus 14. Where should you be investing your resources in fraud prevention? Get yourself a tip line. They're cheap, they're easy to use, and they are effective. Management review is 13%. Someone was looking at a document and found an alteration 6% of the time. Account reconciliations 5% of the time, and dumb luck comes in at 5%, tied with account recs. Notice that external audit is nowhere on there, on that top list. Sources in your tips, 52% of the time it's from an employee. Give your employees a way to tell you what's going on. Okay. Again, these are not expensive to subscribe to. They are administered by an outside service. They will try to get the tips out of there that are just one employee who hates another, that kind of a thing. And so you're not wasting your time. Impact of the pandemic, changes to staffing, more remote work, process changes, internal control changes, disruptions of supplies. All of these things have led to more fraud. The median loss increased by 24% post-COVID, but interestingly enough, collusion went down Probably because you're not in the office, you can't talk to each other as easily. All right. Um, Here's kind of your summary tips. Watch for your behavioral red flags in your departments and identify those control weaknesses, study how to find to strengthen them, and give employees a way to tell you that there's something wrong, that something is suspicious, that something doesn't look right, because that's going to be your number one way to find your frauds. Okay, here's my contact information. Please go ahead and send out a LinkedIn invite. It's got my email address, my entirely too long email address. Feel free to reach out. I will try to be good about responding to emails, but I am pretty busy, but I will do my best. Last item here, there's another question. Have there been any effective state or federal attempts to legislate fixes for fraud, such as whistleblower programs, etc.? Honestly, um, especially at the state level, you're going to have a really hard time finding legislatures that are willing to do this. They, under the guise of pro-business, they do not like trying to put these things out there. Sarbanes-Oxley was probably the biggest, most famous, and most effective method that required internal controls, et cetera. The RICO Act actually has required internal control systems for decades. Sarbanes-Oxley gave it a few more teeth. Unfortunately, there was an act that was put into place under the Obama administration that was also very effective, that was basically gutted under the Trump administration. And that has led to some of our increases of fraud, unfortunately. If you want people who are going to be in there to come up with legislation, you got to find candidates who are willing to do it. I won't mention party affiliations. So, um, any other last minute questions? I'm sorry I had to talk kind of fast. There was a lot of material. Hopefully, I gave you a couple of good examples and ideas. Please reach out to me if you'd like. I know we are now 4 minutes over, which in the scheme of things, when I do presentations, is not bad. I'm going to take that as a win. So, uh, anything else? Any comments, Mark? Anything you want to add?
Oh no, I think Tim, that was very good, very thorough. I enjoyed the presentation. I had an opportunity to see your slides in advance, so I knew you had a few to cover there. But the material is great, and appreciate you giving out your contact info so people can contact you should they have a need or a want. And I think that's the
Yes,
important.
absolutely. Yeah, and just one thing to keep in mind, insurance policies, get your clients or your companies to get employee theft coverage. It's usually a standard add-on in business owner policies, but it's usually the standard is a minimum of like of only $10,000 per occurrence. As you can see, the median is in triple digits, or six digits rather. With very small changes in premium, I've seen small businesses get as much as $250,000 with a very small change in premium and end up getting made whole. I have one of my criminal cases, my controller, who was a CPA, who was stealing from the pool remodeler. They had increased their coverage to 250 and they were made whole financially. Um, why did they think to actually up theirs? Because they had been taken before and only had $10,000 in coverage. So, have your clients, your companies meet with their broker, tell them, hey, we'd like to up this. I think they're going to find it's a really relatively inexpensive investment for much better protection. And I cannot emphasize enough these employee tips. At a previous firm, they had me go out to one of their tribal entity casinos in another state and do some training on some of the same type of stuff. And within a week, they had a tip on a fraud that was pretty significant. And it was we were our firm outsourced in their internal audit function and went out there and did all the work on it. So keep in mind, if you give your employees a safe way to tell you what's going on, it's going to pay dividends. Um, the other thing to keep in mind, especially for your small business clients, if they don't have good segregation of duties, is get that owner more involved, find a way for them to be more involved. Have the check, I mean the blank, the canceled check sent to their house, and have them just be a little random and ask questions. One of the best prevention methods is that when employees are afraid they're going to get caught, that goes a long way towards preventing them from stepping over that line, whether it's in desperation or it's a desire to just fulfill some kind of a living beyond your means thing. They just got to be convinced they're going to get caught. And those doctor's office examples, that the plastic surgeon one, the office manager would come to the surgeon, the owner, before he would leave for conferences and say, I need to cover bills while you're gone. Can you sign a couple pages of checks for me? And they were blank checks. And they would just sign them because they trust these people. Don't do that. Don't do that stuff. Trust builds relationships, but it also that's why fraud works. These people are called con men primarily for a reason, because the word con is confidence. They gain your confidence through trust, etc., and then they steal from you. So you gotta do something to convince these people that you are actually watching. And when I say you, I mean the owners of those small businesses, especially. Okay, nothing else coming up in chat. I'm going to assume that you guys, I'm standing between you and dinner or drinks. So
I
I'll
think
set up.
I do think Charlotte had one last one that popped in. I don't know if it showed up in the chat, but
Okay,
it was about
Charlotte, you got another
AI
one?
and its role.
Sorry, say it again.
It had to do with AI and whether it could play a role here in the
Enormous,
fraud prevention.
huge role. Yes, enormous role. One of the things I mentioned previously when I was talking about, the employee impersonation, AI impersonations of voices, AI altered images, things like that. They're getting very difficult to differentiate between what's real and what's not. I mean, we're
I
seeing this.
think the question is not, is it going to make the fraud, but can it help detect fraud?
Detect the fraud too.
Yeah, okay. So on the detection side, yeah. So that's going to be the forward-thinking people who are using it to actually predict behaviors. It's really more on the data analysis side that's probably going to be helpful in looking at some of these trends, looking at large data sets, and looking for some of this stuff. Heck, you could probably get an AI type of a system to basically use what's called Benford's Law to look at your AP, your checks, that kind of thing. You guys know what Benford's Law is? You've heard of that before? Um, so it's not really a law, but Benford was a guy who figured out that in a naturally occurring set of financial numbers, especially like a checkbook, if you're able to take out recurring payments like a mortgage payment or rent payment, that kind of thing that's always the same, that digits actually show up statistically along a certain bell curve type of a pattern in certain places in a number. And when people are stealing by, like vendor theft, that kind of thing, where they're fake vendors, the human brain is actually incapable of randomness. And so despite their efforts to make the number not a round number so it doesn't stick out, their brain will subconsciously put a two in the third digit place, um, in a non-random way, and it will pop out. And so if you can
Hmm.
get AI to be a predictor and a predictive type of a tool, you can actually create a control that will allow you to at least look at those numbers. You'll still find things that will pop out on a Benford's Law that are perfectly legitimate. That's why you try and take out your known repetitive payments. But at least it gives you a fighting chance and a chance to review some of those payments, and it reduces your data set down to stuff that is more likely to be fraudulent.
Hmm. Interesting.
Yeah,
All right.
I have a very simple Benford's Law Excel template that I just use. It's just super easy. I drop my data set in after I've stripped out my known repetitives, and then I start looking for payments that pop these out. It can be a really useful tool.